Introduction to Banking, Retail, Corporate, and Investment. Hi, my name is Christopher. Welcome to this journey through the fascinating world of banking. Today we are going to study the chapter Evolution and Structure of Banking. In this chapter, we'll explore how banking started, how it has changed over time, and how it works today. We will learn about different types of banks, the role they play in the economy, the regulations that guide them, and how technology is transforming banking. This knowledge is important for understanding not only financial systems, but also the broader economic environment in which businesses operate. By the end, you'll have a strong foundation in banking concepts that will help you in future studies. History of banking, ancient origins. Banking has a very long history, dating back to around 2000 BCE. At that time, merchants provided loans to farmers and traders. One of the earliest banking-like institutions was the Temple of Babylon, which accepted deposits and gave loans. Ancient Rome improved these practices, making banking more sophisticated. Later, during the medieval period, powerful Italian families like the Medici pioneered methods that shaped modern banking. These developments laid the foundation for the banking systems we use today. History of banking, modern banking evolution. Modern banking began to take a more structured form with the establishment of the Bank of England in 1694, which became the model for central banks. In the 19th and 20th centuries, banking services grew rapidly. Key milestones include the creation of the Federal Reserve System in the US in 1913, the establishment of the Reserve Bank of India in 1935, and the start of the digital banking revolution in the 1970s and 1980s. These events shaped how banks operate and serve customers today. Role of banks in the economy. Banks perform several critical roles in an economy. First, they act as financial intermediaries, connecting savers with borrowers and helping money flow efficiently. Second, they manage payment systems, making it possible for people to pay each other through checks, cards, and electronic transfers. Third, banks help manage risks for individuals and businesses. Finally, by providing credit, they fuel business growth, job creation, and overall economic development. Types of banks. Retail banks. Retail banks serve individual consumers and small businesses. They offer services like savings and current accounts, personal loans, mortgages, and credit cards. They may also provide basic investment products. Examples include HDFC Bank, ICICI Bank, and the State Bank of India. Retail banks are the type of bank that most people interact with directly in their daily lives. Types of banks. Corporate banks. Corporate banks focus on serving medium to large businesses. Their services include business loans, credit lines, cash management, trade finance, and foreign exchange. Examples include Axis Bank's corporate division and Citi Commercial Banking. These banks support companies in managing their large-scale financial needs and international transactions. Types of banks. Investment banks. Investment banks work with corporations, governments, and wealthy individuals. They underwrite securities such as IPOs and bonds, advise on mergers and acquisitions, and engage in trading and market making. Examples are Goldman Sachs, Morgan Stanley, and JP Morgan. These banks play a major role in the capital markets and in raising funds for large projects. Types of banks. Central banks. Central banks, like the Reserve Bank of India or the US Federal Reserve, serve as the banker to the government and other banks. They control monetary policy, issue currency, and supervise the banking system. Central banks are critical in maintaining financial stability and managing the overall money supply in the economy. Banking regulations overview. Banking regulations ensure financial stability, protect consumers, prevent fraud, and maintain public trust. After the 2008 global financial crisis, regulations became stricter, with higher capital and liquidity requirements. Without regulations, banking systems could face serious risks, leading to economic crises. Key regulatory frameworks. Some important regulatory systems include the Basel Accords, the Three, which set international standards for bank capital adequacy, and India's Banking Regulation Act of 1949. Other measures include KYC norms, AML regulations, and deposit insurance schemes. These frameworks keep banks safe and protect customer interests. National versus international banking systems. National banking systems operate within one country, serving local needs and being regulated domestically. Examples include cooperative banks. International banking systems operate across countries, facilitating global trade and investment. Examples are HSBC and Standard Chartered. Each system has its own compliance requirements, but both aim for systemic stability. Role of RBI and other regulators. The RBI formulates monetary policy, issues currency, regulates banks, manages foreign reserves, and acts as banker to the government. Other regulators include SEBI for securities markets, IRDAI for insurance, and PFRDA for pensions. Together, these institutions ensure the stability of India's financial system. Financial intermediation. Financial intermediation means connecting savers with borrowers. Banks perform maturity transformation by turning short-term deposits into long-term loans, spread risk across many borrowers, reduce transaction costs, and manage information asymmetry. However, they face challenges like liquidity risk, credit risk, interest rate changes, and competition from non-banking intermediaries. Emerging trends in banking. New trends include digital banking through apps and websites, fintech integration, blockchain technology, AI for fraud detection and risk assessment, sustainable banking with ESG focus, and open banking through APIs. These trends are reshaping how customers interact with banks. Digital banking revolution. Banking has shifted from physical branches to 24/7 digital access. Around 76% of banking customers use digital services, and 64% prefer mobile apps. This transformation reduces costs for banks and increases customer convenience. Banking and financial inclusion. Financial inclusion aims to provide services to people who previously lacked access. Mobile banking reaches remote areas, microfinance offers small loans to entrepreneurs, and financial literacy programs educate people. In India, schemes like Jan Dhan Yojana have opened over 400 million accounts for unbanked citizens. Banking careers. Banking offers diverse careers in retail, corporate, and investment banking. Roles include branch manager, relationship manager, credit analyst, investment banker, and securities trader. Skills needed include analysis, attention to detail, and strong communication. Banking challenges and future outlook. Challenges include cybersecurity threats, compliance costs, fintech competition, low interest rates, and changing customer expectations. The future will bring more digital transformation, AI integration, personalization, and expanded services to underserved markets. Key takeaways. Banking has evolved from ancient money lending to advanced financial systems. Banks are crucial intermediaries. Different types of banks serve different needs, regulations maintain stability, and technology is reshaping the industry. The future holds both opportunities and challenges for banking.